Let's go to business news now with Giles Beckford. Hi, Giles. A big review, it seems, into how the Reserve Bank handled the CBL Insurance Group, and it's showing that, it could have done better, but in the end, it did all right, did things right?
Well, yes, it was. The report was commissioned by the Reserve Bank after some criticisms about how it handled the whole thing. So it got in a Wellington lawyer, Mary Sholtons, and an Australian actuarial expert with insurance industry knowledge, John Trowbridge, and asked them to review how it had handled the whole thing. Now, CBL Insurance, for those who don't know, was basically the company that was behind, for instance, building warranties. So if you took out a Master Builders Association warranty for your new home that was being built, CBL Insurance was more than likely behind that warranty. It was the one that was carrying the risk, was reinsuring and the like. So that's how important they were, although probably they fly under the radar for most people. In 2012, the company had to join in a new licensing regime for the industry. The Reserve Bank was the industry regulator. And even then, the Reserve Bank had some concerns and had heard some whispers about how strong the finances of CBL Insurance were. But in the end, it allowed the company to be licensed, and in subsequent years, although it had growing concerns about the financial strength of CBL Insurance and its ability to cover potential future claims, and this is what they call long trail claims. In other words, these are claims that might not arrive for 10, 12, 15, possibly even 20 years, but you still need to be able to cover the risk that arises from that policy. And it had growing concerns about that. The report basically says that the Reserve Bank didn't have enough people in the insurance supervision area, that they weren't well informed by and large, that they took a bit of an easy course. They were too lenient with CBL when they should have actually been pressing far more strongly and asking questions of CBL about its strength, its financial strength, and where it was going. And then at that stage, this is around 2015, CBL went on a rapid growth phase, buying businesses in Ireland, in France. It was lined up with an operation in Denmark and Gibraltar as well. And this was all in advance of the company listing on the stock exchange. Now, at that stage, the RBNZ renewed its concerns with the company, but it basically took the company's word for it that it had enough money in the kitty to be able to cover it. In the end, when the chickens came home to roost and the RBNZ plucked up the courage or had the resources to be able to look more deeply into it, it had really big worries about the financial strength of CBL Insurance. In the end, it cracked the whip on it. It forced it into liquidation, and that occurred last year. The report says the RBNZ was too timid. It says the RBNZ was willing to accept CBL's assertions about its financial strength too easily. It says that the RBNZ put some things to one side when in fact it should have tackled them right at the very beginning. So it calls into question really the whole way the RBNZ went about it in the early years. But it does say at the end, it got there. The liquidation really was handled professionally, it was handled properly, it was handled legally, and from that point of view, the RBNZ gets a tick. But really, it raises some serious questions about the way the RBNZ was staffed and the way it was approaching the whole sector. And of course, we've been hearing recently from the RBNZ on banks, which it also supervises, and how it's going to up its act in that regard as well. But in the meantime, it's a sort of you didn't do totally bad, but you could have done much, much better.
Past, but could do better in future. So just very briefly, what's the RBNZ said in response?
Well, the RBNZ, it accepts that it was a bit timid, that it was a bit lenient in its handling on the issue. Although I might say that Adrian Orr bridled when I put it to him that the bank had been inexperienced, under-resourced and at times impotent. And he said that I was just paraphrasing the report. And I said to him, well, it doesn't matter what gloss you put on it. In the end, you didn't get a total pass mark. He points the finger quite clearly, in fact, at the people who ran CBL Insurance, saying it was a horror chapter in New Zealand commercial history, that serious questions have to be asked about the way they ran the company and the way they acted.
Okay, so time for a quick twirl around the markets. What are your numbers today?
It's another record close for the share market, a bit more modest though, just up 12 points, 10,544. On the currency market, the New Zealand dollar, 66.8 US cents, 95.4 Australian and 53 British pence.
Thanks, Giles. That's Giles Beckford with our business news. Have a happy commute home, Giles.